All right. I apologize in advance. This is kind of on the fly. I don't know if the lighting's good or if the sound's good, but hopefully it is. Um, so, name's Joseph Metcalf. I help run our single family office here in Norfolk, Nebraska. My day job is I run the back end office for a service business, and then about a third of my time is in the finance side. So, kind of the reason why I want to put this together is a couple reasons. So, one, I got like 25 phone calls in the last couple weeks, and every time I explain Abex, because the vision and just there's so many moving parts and pieces to the business, it takes like literally an hour to explain every single time. So, what I'm going to do is I'm probably going to talk fairly rapidly, but let's try to get through this in an hour or so. And then I'm just going to send people the link just to give an idea about the business side. So, obviously, if you're sophisticated retail, this is going to make sense. Hopefully, you can start putting the pieces together. I'm not here like to go into every single nook and cranny. I'm here to kind of explain what is Abex, what are the main business pieces in hopefully a more retail layman's term fashion. Now, if you are an institution or if you are a fund manager and you haven't met with the team, this video might shed some light on what they're trying to do. None of this is financial advice, obviously. I just want you all to kind of consider what's my view of the business, what's my family's view of the business, how do we think about our risk management we're investing. This is our largest equity position across the board, and we've got two different alternative asset funds, and just kind of the thought process. I've had the luxury of watching this company for 5 years. So I understand that as someone new coming in or someone coming in maybe a year or two ago, just looking at press releases, that sort of thing, there's just a lot of backstory, a lot of back end that you may or may not understand. So I'm trying to do my best just to go through the basics. So there's basically like three business pillars, and I'll be the first one to tell you today I'm going to get some stuff wrong. If one of the team or a professional finance person looks at this video, they may say, that's not technically true. It's okay. I'm just trying to build a framework for people to understand, and then I'm happy to field questions and correct things where I'm wrong. So I see this business as having three businesses. Most people think it has two. Hopefully I won't share anything I'm not supposed to today. But it's the most asymmetric risk-adjusted return in a business I've ever seen. Now, I've only been building businesses for 17 years. I'm 36 years old. So yes, can I be wrong? But I'm going to build the case and just lay out the steps of how did we think about this when we were investing? What milestones did Abaxx Tech and Abaxx Exchange have to hit for us to allocate more money? And then about 6 weeks ago or so, towards the end of July, we quadrupled our investment in about a 7-day period, and I'm going to explain why we did that. So just to silo things a little bit. So Abaxx Tech is a technology company based out of Canada. They did a reverse merger into kind of a defunct company called NML back in the end of 2020, and easier public market wise to do that. If I were, this should be a private company. If I were to guess, maybe some of the original investors, sometimes those families like a public company because it gives more optionality as far as how they can raise money. And I would guess back then, like I know the Abex team, they on their tech suite, they rebuilt it like 3 times. So I remember in like May of 2022, Josh and the team made the decision, hey, we're going to build this from the ground up. We're going to build it the way we want. And so I think when they went public and when they did the reverse merger in, I think it was like December 10th or so of 2020, The thought was, hey, we're going to build this much more quickly. Well, that basically added 2 extra years onto this build. And it was actually a very, very good thing in hindsight. It gave more time to think about, hey, what's the market want? And how do we fix some of these problems? But that's probably why. So it trades on, it used to be the Neo Exchange. I think now it's renamed the CBOE or something like that. I get it wrong all the time. So it's a small exchange in Canada, so you have to buy it over the counter. Most brokerage accounts allow you to do it. I know Vanguard won't, but like a Charles Schwab or an IBKR would. So we've got a tech company up here in Canada. They are about 90% owner of a futures commodity exchange in Singapore. Not only the exchange, but a clearinghouse. So what is a clearinghouse? A clearinghouse is basically like a really, really highly regulated financial bank, basically. Okay, it's a financial company. It's basically the risk meter of the economy. In every first world economy has clearinghouses. So basically, clearinghouses. If I am a big institutional player and I want to borrow money and trade and do all sorts of stuff, I've got to, the clearinghouse, regulates me as a player so I don't blow the market up or go, 1,000x leverage, do something crazy. Okay. So, overall in the whole economy, an exchange is one of the most profitable businesses in the world. So New York Stock Exchange, NYMEX, CME Group, all those different businesses, those are exchanges. It's just matching buyers and sellers. Out of all the exchanges, the futures commodity exchange, the subsegment of the futures commodity of the exchanges, is the most profitable business. So when we started investing in 2020, I had no idea about some of this tokenization tech that we're going to talk about. They had some very, very fascinating ID, like zero knowledge proof technology that was developed over the years. And I thought that could be a very, very big business. But originally, that was probably the onus for investing in it, is that technology. But originally, hey, we're building a futures commodity exchange and clearinghouse. So I started buying the stock personally, I think right after they went. Actually, I bought in an ML a few days before the reverse merger and then kept buying there for my own account. If I knew how much risk it was way, way back then, I think I would have probably bought a little bit less, because back then I didn't have a lot of money 5 or 6 years ago. I was still young, building businesses, and it was really, really risky. Even to the point where, like, when the Abaxx team reached out to large institutional players, energy companies, some of them wouldn't even take their call because they're thinking there is no way you're going to get, one, an exchange license, two, a clearinghouse license. So I believe it was December of 2023, somewhere around that time, they received their exchange and clearinghouse license from the Monetary Authority of Singapore. It's just short nickname MAS. And what that allowed them to do is, spin up a futures commodity exchange and clearinghouse so that large players could put up commodities to buy or sell, short, whatever they want to do on a futures exchange. So let's talk a little bit about what is a futures exchange, what's it used for. So the whole basis of Abex technology, it's a business that manages people's risk. That's it. Now, when I say that's it, it's a humongo business, but that's it. So there's 3 products, okay? We've got a futures exchange and clearinghouse over here, where people can sell their commodities on a forward curve. We'll talk about that in a second, okay? The business people are really excited about right now is basically the movement of collateral. That's another business. And the business hardly anybody talks about, only within the exchange, is identity verification. So 3 separate, I see them as 3 separate siloed businesses, okay? And then 1, 2, 3, the businesses get bigger, 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 and bigger. We're gonna talk about some numbers at the very end of this. You're probably gonna think I'm crazy. That's okay. I'm just sharing my personal thoughts on how I think about the business, what my family thinks about the business, okay? So, essentially, and I'm going to get a little bit of this wrong as far as who comes from what, you've got a core group of people that have been in energy markets, mining markets for a long, commodity markets as a whole for a long, long time. Let's just call it decades. Josh and Tom McMahon, I think, I'm not sure who had the idea first, but those are your two, I think, original founders. And they probably, I think they both wrote checks. They saw this tremendously large opening. So what is the large opening? So your 200-pound gorillas is ICE and CME. They just dominate everybody, and they bought just pretty much everything. Each of those businesses have a market cap around $100 billion. Over time, the market has become very financialized. What does that mean? Okay, well, a real market is where, hey, I've got this water bottle right here. I'm going to buy and sell it to you for $10. Okay, that's a market. It's a physical market because I'm going to deliver that water bottle to you. Well, what's happened over time is CME, it's not their fault. It's just really profitable. CME, ICE, the major exchanges and clearinghouses of the world, they say, well, you know, we could have a contract on that water bottle and we could just trade the contract back and forth and be super profitable. And whoever has the contract at the very end of the close, we just close out paper. We don't have to give you the water bottle, okay? There's a problem with that. The problem is if we want to know the cost of that water bottle, okay, we're trading back and forth paper. How do we know the actual cost? You actually don't know the actual cost until that water bottle goes to delivery. When, let's say Josh sells me this water bottle for $10.03. He gives it to me. That's delivered at $10.03. So in that instant, we know this water bottle costs $10.03. Now, if we were trading this water bottle back and forth, it might trade at $9, it might trade at $12, and then we close out the contract. We don't actually know what the true market price of this water bottle was. Okay, so finance uses a term called price discovery for that. Why is that really, really important? Okay, here's why it's really important. And I don't have a background in this. I've just learned a lot over the last 5 years. So just bear with me if I get a couple of things wrong. But okay, why is price discovery important? Okay, we've got, I think, 11 futures contracts right now. So let me go through them all. We've got 3 liquid natural gas contracts. There's one in the Gulf of Mexico, one in North Asia Pacific, and then one in Northwest Europe. We've got 3 carbon contracts. We've got 3 lithium carbonate contracts. And then we've got a nickel sulfate contract and then a gold kilobar contract out of Singapore. Okay, all those contracts have different deliveries, all that stuff. Okay, so if I'm a liquid natural gas producer, what do I have a lot of? Liquid natural gas. So if I'm sitting here on a lot of liquid natural gas, it's just like a corn farmer. So we're right in the middle of corn country. If I'm going to harvest 10,000 acres of corn, you think I'm going to go to market and just sell it at the end of November after all that corn is in, just whatever the market price is? Absolutely not. I'm going to hedge my risk. Now, there's more sophisticated ways of doing it, but the general way that people, farmers do it around here is, okay, it's July. I know I've got 10,000 acres. Maybe I'm going to sell forward 25% of my crop on the futures market. So basically, I'm selling grain. It's basically a contract for me to, I'm promising to deliver a certain amount of grain to somebody at a fixed price. What does that do? Okay, so let's say, and I have no idea what corn costs right now, but let's say a bushel of corn costs $9 at the end of harvest. And let's say it's June and I sold, let's say I sold some corn at $8. Well, what I was doing was I was taking a quarter of my harvest and I was just making sure it doesn't trade down. So at least I lock in a small profit to cover some of my cost. Okay. So let's say I sell corn on the December 25 and then the January 26 contracts for $8. When I go to harvest, it's $9. Okay. And then maybe a month later, it might be $10 or maybe $7. So this is just a way for producers to hedge their price exposure. Because let's say it cost $7.90 break even for that farmer. If he can sell some of his crop at break even or better, that's good. So if I'm a liquid natural gas producer, I'm going to do this. Here's the problem though. I've got a lot of liquid natural gas. I probably don't have a lot of money, to be honest. It's in the business, okay? So I'm going to go to an exchange like Abaxx Technologies, and I'm going to say, hey, I'd like to sell forward some of my production ahead of time. Well, I've got to have something for collateral. So I'm going to say, hey, I've got $1 billion of liquid natural gas in the tanks right now. I would like to put that up at the Abex clearing, and I would like to borrow $1 billion. They're not going to let you borrow $1 billion. So what they're going to do is they're going to say, hey, and let's not use Abex for example here. Let's say ICE or CME or somebody else is clearing it. They're going to have a banking partner, and they're going to say, well, Joe, you got $1 billion of LNG, but there's no benchmark. I don't know the price of that. That's too risky for me. So what I'm going to do is, I know LNG is trading between $9 and $13. So I'm going to say, I'm going to give you a loan for $600 million on your billion. Okay? Here's the problem. There's $400 million of collateral, LNG, sitting in my tanks that I can't leverage off of. But that's just the structure of the market right now. Now, I don't know the true leverage ratios. And here's the dirty little secret that's terrible. The big banks love this. They love opaque markets. They've got teams of researchers, and they're doing all these deals everywhere, so they get a feel for what the actual price is. They're probably the only ones in the market that get a feel for what the rough actual price is. Me, if I'm selling LNG to Josh, and let's say Josh is a China-based utility. We're going to say, hey, let's agree on this price. Well, generally what they would do, they would say pipe gas, like TTF. They would take a crude oil adjustment, and then what's the shipping cost to get it there, okay? Sounds okay, but the banks, number one, the bank does have risk there, but they're also taking an extra advantage. So the banks know, hey, I could have lent Joe $700 million. I gave him $600 because I really know what the risk is, but Josh and I don't. And they get fees for that. It's an opaque market. We have to use them, and they make a lot of money doing it. So you got a backdrop of these large exchanges that are okay trading paper because they make a ton of money doing it, and you have the banking partners going, we want opaque markets to, and because we make more money. So in comes Abex. What did they actually do? Okay, so number one, they launched 3 LNG contracts. Took forever to get liquidity. Still getting liquidity. Why? Well, these global players are so daggum big that it takes 6 to 18 months to onboard one single player. Okay? So, and Josh will tell you that's probably one thing, or Joe, that they didn't expect. Like, they had one client, I believe, that had like 7 subsidiary banks. And they're in different jurisdictions all over the world, different regulators, different risk teams. It just takes daggum forever to onboard these people. Okay, so your 3 LNG contracts started trading June 28th of 2024. We got a reference price in March. What's a reference price? Reference price is where Josh has a utility, I'm an LNG provider. We're not trading on the exchange, but we see some activity over there, and we say, oh, let's use the price of that exchange over there. That's a very, very, very good sign. I believe it was one of the major oil contracts back in the day when they were just started getting going. Almost no activity, and then a reference price, okay? So forever to get these people onboarded. We started to get liquidity this summer, and then now we've got more than as of I think this week or last week, more than a full cargo of LNG, which don't quote me, I think it's 350 contracts or something like that. I'm wrong on that number, I'm sure, and should know that. And basically on 2 different months, that's a huge deal. So, a cargo of LNG, not that much in the grand scheme of things, but like last week out of the Gulf of Mexico contract, I think there was like 5.11 cargoes of LNG traded. Only 28 ships left last week. So, I would tell you the contract looks like it's doubling in volume almost every 30 days. It is getting some really, really good volume. And we haven't even gotten our FBOT yet, which is basically just a nod and some licensing by the CFTC of the United States to allow U.S. players to trade. So this is, as far as I know, all international. So let's back up. What did Abaxx actually do? They launched these benchmarks. Why did ICE and CME and some of those other people not do this? Because physical markets are really hard to do. So you've got to have producers. You've got to have delivery points. You've got to have, hey, what happens if the contract goes south? What happens at delivery? What happens if the producer can't deliver? What happens if this? Happens if they're late? What happens if someone goes bankrupt? Blah, 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 and on and on and on and on. Third-party audits. We need gas with this different tolerance and this much of this gas and this much of this gas. Because LNG is not just pure gas. There's other components in it. They're really, 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 really difficult to set up. Okay, so Abex came in and said, okay, there's this huge opportunity here. The big boys are not giving the price risking tools to the LNG producers, okay? So me as an LNG producer, if I don't have a liquid benchmark, and benchmark is just a fancy word of it's a LNG contract and it's trading really liquid and people use that contract to reference prices off of deals or trade, okay? So it's basically the go-to like West Texas Intermediate Benchmark, something like that, okay? So generally, first mover gets it if they can get enough liquidity. And we're definitely first mover. I believe one of the big exchanges tried to launch an LNG physically delivered contract maybe 5, 6, 7, 8 years ago, with just poor timing, didn't get liquidity, and it just died. So why is this important? Well, if you have a clear benchmark and you can get a good price, we know exactly what the cost of this is every single day, right? Okay. Why is that important? It's important because when I go to the bank and I put up my $1 billion of LNG, the bank's going to go, oh my gosh, Abex has a benchmark. We can use that as a reference price. We can say, hey, we're going to do $11.27, and I'm going to give you $900 million off your $1 billion of collateral. That is a tremendously big deal, okay? Why is it a big deal? It allows me to borrow more, allows me to hedge more, and I know where my risk is. So when you got cleared price discovery and you know what the dollar value of these commodities are, then you can hedge your risk out, okay? So to date, we've done that for 11 different markets. There's two basically main contracts that are really important right now, and they're all important. The battery metal, the carbon contracts, all that stuff, very important. The second one that I'm really excited about is the gold kilobar contract. Why is this important? China, I think China, I'm not sure, other players in Asia, they trade in gold kilobars where the United States trades in ounces. What's really important is a trader in Asia can't take an ounce bar in the United States or London or Switzerland or Dubai and hedge out his risk in the gold market. The gold, in contrast to LNG, launched June of this year. It's been bonkers ever since. So I think the volume is like doubling every 30 days, just like LNG, but it did it right away. So we have the only kilobar gold contract outside of China, I believe, in the world. Okay. So I'm leaving out a couple critical pieces. So what I didn't say, we talked about how the banks love these opaque markets. Well, where do you think this capital comes from? So I believe most of the capital comes from New York, London, Switzerland, and probably some out of Dubai now, okay, Middle East. Why is that really inefficient? Because I think the majority of the trading, the majority of the contract is Asia. So what you have is you've got all the trading over here, and then you've got the financing over here. Humongo gap, humongo jurisdictional gap, okay? So that's a problem. It's a problem because if I have to, let's say I'm a producer down in the Philippines or Singapore or China, and I got to get my capital from the West, but the trading's over here, there's a lot of friction, a lot of middlemen. It's very, very, very expensive, okay? So hopefully I kind of like, here's the reason why I spent so much time, we're 25 minutes in now on just what a futures contract is, because when you're looking at Abex as an investment, number one rule, don't lose money. Number two rule, don't lose money, okay? So let me give you an example. I bought a bunch of this in my personal account over the years. If I knew it was so risky, again, probably wouldn't have bought it so much. When they got their exchange license, they're so hard to get. Those licenses, the exchange and clearinghouse license together, I think are worth roughly 250 million US dollars. Maybe down to 200, but somewhere in there, okay? So like a year or so ago, we were buying the stock at 250 million US dollars. So we are basically buying it for the piece of paper, getting the business for free. Okay. So when we're looking at this, you've got piece of paper that's worth probably $7.20 US ish, give or take. The stock price has gone way up since then, so you got $13 of blue sky above that. But you've got two major contracts that are trading in increasing volume rapidly. Those are going to be worth a lot of money. If you look at the major benchmarks of the world, like the Brent benchmark and some of the other benchmarks, they're usually worth, I mean, they're hundreds of millions of dollars at the minimum, and a lot of them are worth between $1 billion and $3 billion. So our family was looking at this going, okay, futures commodity exchange, clearinghouse, there's liquidity. Was I getting nervous before there was liquidity? Absolutely, because if there's no liquidity, it's not worth anything. Now we're looking at a business with, I don't know, the market cap's probably around 700 million US dollars. 704. And we've got licenses that were $250 million. And it looks like we're going to have a couple benchmark contracts. We see this business easily $2 billion today. We would pay for it and be comfortable with it. So that's kind of the backdrop. Now, a couple things that I was really excited about. So that's kind of the base business. Hopefully I explained it enough. And I'm leaving tons of stuff out. I'm leaving base carbon partnership, what they're doing with carbon credits. I'm leaving out what they're doing with MineHub right now. There's just not enough time to explain all that right now. So so a couple years ago, I knew that Abaxx Tech. Okay, here's what I'm leaving out, and here's another big reason why people are trading on the exchange. So, as far as my knowledge goes, if I'm a trader and I'm on one of the other big exchanges, they have all of my data. So if I'm messaging back and forth with Josh, trading this, they have all of my chats, they have all of my trades, they have all my data. Do you think that they're going to trade against me? I know it's illegal too. Daggum right, they're going to trade against me, or some partner's going to trade against me, or they're going to sell my third-party data. Okay, so the really exciting part about this business is at the very, very start, there's a suite of technologies that basically run the exchange and clearinghouse called ID++. Okay, it's basically the technological infrastructure. That's the second part of the business. Now, there's two businesses that come out of that, I'm convinced, and we'll go through those in a second. So basically what ID++ allows you to do, it allows the trader to log in without Abex having the password, okay? So why is that really, really important? It's really important because Abex doesn't have a lot of passwords, so no one can hack your account, obviously, as far as they're concerned. And here's the big, big one. My information never hits Abex servers. Only what the regulators need. So if Josh and I are going back and forth on a contract, hey, will you do this at this price, this at this price? That's just between me and him, okay? Never hits the Abaxx server. So I'm not exactly sure if that's hosted on my company servers or somebody else servers. I think we're using AWS for hosting. Not quite sure. I should know that as well. So those are two big things. So ID++ has a few things that it can do. So number one, it's decentralized identity. I think it's a zero knowledge proof to log in. I'll go through how that works, hopefully, or my idea of how it works conceptually. Once you're logged in, we've got Messenger. So cryptographic encrypted messaging between me and another counterparty if I'm trading. Okay. There's also a vault. So vault can transfer documents. So believe it or not, ship comes in the port after, let's say I sold an LNG contract and the ship's coming in. Oftentimes the bill lading and all the information for that paperwork comes in the mail after the ship is come and gone. It's so ridiculous. Or it's with the ship and it's got to be hand processed. That is ridiculous. So, so basically all of those shipping paperworks, all the bill and lading, all that stuff, that's digital, okay? And that's just between me and my counterpart. I've got nothing to do with that, right? So we've got, you got login, you've got Messenger, you've got the vault, and you can sign, okay? If I'm signing contracts between a counterparty, okay? All right. I'm probably missing one, but I think those are the main ones. I thought incorrectly, a long time ago, I thought, okay, well, some of it was correct. I thought, okay, ID++, decentralized identity, could be like a net over the internet where I can log into like a Gmail and then I can go to Yahoo and the computer knows it's me and it's seamless through all the different applications. No more walled gardens as far as logins concerned. I was right, and we'll talk a little bit about that. But what I was wrong was I didn't realize the tokenization collateral movement technology. So this tech, it's cryptographically driven as far as I know. And some of this, a lot of this is speculation, guys. There's patents out there you can look up from like 2018. I know there's probably more patents coming, so you can look through some of that stuff. But basically, a lot of cryptography used, and without cryptography, none of this is possible. Okay, so I thought sort of incorrectly that it was closed loop, and we are going to go to T0 settlement, which no exchanges have gone to that yet. No futures commodity exchange as far as I know, which basically means you can settle your trade in one day. Usually it's like T+1, T+2, T+3, wherever the trade is. Why is that the case? Well, it's the case because, look, you got different jurisdictions, different banks, okay? They've got different hours, and you've got to send money from one bank to the next, to the next. It's just this humongous friction. It's similar to, here's a good example. It's similar to, we support a couple kids going through school in Nairobi, Kenya. We used to send money through Western Union, and that would just bank hop. Well, by the time it got there, I mean, we're being charged a hefty fee, they're being charged a hefty fee, and then the exchange rate, it was horrendous. Now what we do is we use a strike. It's a layer 2 to Bitcoin, and they don't know we're using Bitcoin, and you know, we can send $1 all the way across the world. It settles in about 10 minutes, and it takes my dollar, exchanges it for Bitcoin, zips it all the way across the world, and then exchange it for Kenyan shillings, plops in their M-Pesa wallet on their phone. They don't even know we use it. It's instant finality. It's settlement, final settlement, okay? Takes about 10 minutes. They don't care what rails we're using. It's just there. We avoided all the fees. It cost us about 2 pennies, okay? Abex is doing something very, very similar, except they have an added component, which is title, okay? So I thought it was a closed system, and they're just going to take people's collateral and be able to settle and move it around instantly. I didn't really know what that meant as far as, I thought it was, hey, here's a hub, there's a hub, there's a hub. That is technically true, but this is why our family quadrupled our investment about 6 weeks ago. So I finally was told and walked through the process of what actually was built. Now, in all honesty, we cannot verify this information. There's pilots that are announced, okay? But some of it is, hey, we've watched the business over 5 years progress. Everything they said they're going to do, they did. Yeah, the timelines are compressed. A lot of retail guys don't understand. Like, one retail guy was really upset. Oh my gosh, they're not hitting any of the milestones. Well, you're waiting for regulators. And to me, when you go to a world-class company, if you're 2 years behind, doesn't matter to me. Now, it does matter if, it does matter as far as business execution, because the competition, can catch up in that amount of time. So I thought it was that. That's not actually what they developed, okay? What they developed is basically the digital check. Now, I've done about 1,500 hours, probably about 2,000 hours of research in the Bitcoin space, because our family had a large Bitcoin position. And so I was researching all this cryptographic stuff, how does Bitcoin work, how does stablecoins work, all this stuff over the years. So when I found out digital check, it's like a bomb went off, because I realized what that means and how valuable it is. So what is a check? So I'm going to write Josh $1 million check, okay? Maybe I'm drunk, or maybe, I've never been drunk, but let's pretend. Give him that check, and then I wake up in the morning and I go, no, I did not write you $1 million check. He's like, oh, yes, you did. So he takes it to a court. He gets a signing expert, whatever they're called. Oh, yeah, that's Joseph's signature, takes it to the judge. Sorry, Joseph, you wrote the $1 million check. What did that actually do? It was a piece of paper, and I signed my name. What does signing name actually do? It basically gives legal ownership to Josh that I gave him a check. Okay, so why is that important? It's transferring the title of the $1 million from me to Josh. Okay, well, if you look at the world right now, I think $94 trillion a year that gets it's a humongo business transferring this money in the background. So this is an institutional game. It's not a retail game. So if you were walking into the bank, even amounts down to like $100,000, and you would you'd use a SWIFT system possibly, and so you walk down to your banker, you give them ID, you sign all these documents, you verify where it's going. When you walk out of the bank, the ops department usually calls you and says, hey, Mr. Metcalf, I want to verify all this information, blah, blah, blah. Big business moving money around. Why do they do that, and why do they have to go through it? Well, they have to go through it because they're confirming that I have title of that money, those US dollars, and I'm sending it to Josh, and I'm transferring title to Josh of that $1 million US. No one's ever been able to figure this out. It's basically impossible to do. Now, cryptography allowed it to happen. Now, I have not the slightest clue how they get this to work. I was told they had to use 5 cryptographic systems. They rebuilt it 3 different times, and I think they have one of the best engineers and cryptographers in the world working on this. It's so good, and I think they've been really quiet about it because I'm just going to say it. Coinbase poached one of the guys from Abex, and I think their institutional custody is the framework that Abaxx built. Okay, so Abaxx was really quiet about this for the longest time. So it took a while to figure out. And in the end, we had to be told, hey, this is actually what it is. Why is that daggum important? Okay, it's important on a few fronts. Number one, if I'm an institution and I can transfer value very rapidly, it's a humongo money saver. Remember when we were talking about the LNG? So there's 2 parts to that. So you do need price discovery, okay? So you need a liquid benchmark. So if it was a corn contract, you would need a liquid corn contract. You need something else as well. If you're working in several different jurisdictions and my collateral is in the United States and my hedge is in Singapore, it's halfway around the world. If you're able to move that collateral from the United States to Singapore in the same day, oh my goodness, does that save a lot of money. Number one, it saves all the frictional fees. Number 2, if there's a margin call, the banks / clearinghouse know they can get that money really quickly. Collateral, I should say collateral. Why is that really important? Because when I borrowed $900 million off of that $1 billion of LNG, they allowed me to go from 700 to 900 because they knew what the LNG cost. Well, guess what? I think that they would let me borrow $950 million if they knew the collateral could be there instantly within 24 hours. Okay, so here's where people are getting this wrong. And here's what I was totally wrong about this. So I'm watching these stablecoin markets develop, thinking, oh my gosh, I can move money all over the place. We did a small private placement earlier this spring where we took US dollars, transferred it to USDC, and then sent it to the company instantaneously, well, almost instantaneously on Ethereum. And for like $3 or something, we did like a $50,000 private placement. I did not know at the time that there's major risk in doing that. If you're, for us, it's okay if we're in and out. But the stable coins, how they're built right now, are single issuer. You have single issuer risk. So what happens is, I'm going to use Tether as an example so we don't get the US dollars mixed up. So Tether is a stable coin issuer. They have a US dollar stable coin called Tether. I'm going to give 1,000 US dollars to Tether. They're going to give me 1,000 USDT digital dollars back. What do they do with that 1,000? They take that 1,000, they buy high quality treasury, probably T-bills, okay? They're making the money off of me. In a theater near you, they're probably going to have to pay on that eventually. One of the most profitable companies in the world, I think they made like $12 billion or something one year off of 50 people, right? So they bought US treasuries, they're taking the spread, and I get the synthetic dollar. Now you're going to say, well, why did Joseph want that synthetic dollar? Aha, I know that they're raping me and taking, the money I would have made if I put it in a treasury, but I can take that synthetic dollar and send it all over the planet at the speed of light. It's really, really cool, okay? Here's where I got this wrong. That's a retail product. The reason it's a retail product is because if Tether goes bankrupt, okay, I lost my $1,000. Now you're going to say, Joe, wait a second. You traded, they have a treasury, that's collateral, blah, blah, blah. That is true. If they managed it correctly and they had liquidity problems, I should get my $1,000 back. But they may not have managed it correctly. Maybe they bought JCPenney debenture stocks with it, getting 10 or 11%. Did that in my early days, stupid. I may lose all my money or have a big haircut. Okay, so the current stablecoin industry thought they could go to regulators in the clearinghouses and educate them and say, hey, we'll do an audit. Why don't you, Joe, LNG producer, let's say I don't have LNG. Let's say I have $1 billion and a money market, $1 billion cash. I'm going to give $1 billion cash to Tether. I'm going to trust you that you have the money because you got audited. Heck no, I'm not going to do that. Number one, I'm not going to trust them. Why would I take counterparty risk when I don't have to? Number two, here's the problem, okay? Even if I got my $1 billion back, okay, I might have needed that money right away. I might be bankrupt because I couldn't make a margin call or I couldn't use that collateral in a certain way. So if Tether goes bankrupt and my $1 billion are stuck and I can't do anything with my USDT, I've got $1 billion sitting over there, I might be able to go bankrupt. I'm not going to care about my collateral because I'm out of business anyways. Okay, this is what I did not understand. Okay, here's what Abex did, and no one has figured this out as far as we know. This is a one-of-one business, and it's worth so much money you would laugh me right out of this room. Okay, Abex says, okay, Joe, you give me, let's say I have $1 billion in US treasuries and I want to use them for collateral. We're going to tokenize those treasuries, chop them up in little pieces, which is just like the stablecoin companies doing, right? They take your money, they buy treasury, and then they give you something in exchange. Abex can do the same thing, But Abaxx has something really, really valuable, really, really important that no one else has. They have title, okay? So they cryptographically attach digital title that says Joseph Metcalf to all of those $1 billion of U.S. Treasuries, okay? No one's been able to figure out how to do that. Why is that really important? It's really important because let's say the issuer is Mr. Green Tape, and Mr. Green Tape issues $1 billion. Let's see, I've got $1 billion of treasuries, Mr. Green Tape. Mr. Green Tape's going to tokenize it using Abex technology, and Mr. Green Tape goes out of business. Doesn't matter. I still have my tokenized treasuries. Why? Why does it not matter? I can still use them. Why can I still use them? Because they have title written on them. It's like these digital checks running all over the place, okay? So you can do this with money market funds. You can do this with gold. You can do it with oil. You can do it LNG. So what Abex can do, they can take a cargo of LNG. They can cut it up into all these dinky pieces. You're tokenizing it. And they can use the tokenized LNG as collateral and zip it all the way around the world, okay? And here's why it's really, really important. What's really important is they built all this according to the current laws and regulations. What do the regulators want? What are the current regs, okay? So we don't have to, as a tokenization company, collateral tokenization company, we don't have to go to the regulators and try to convince them in anything. It's going to take forever, and it's probably not going to happen, okay? And I'll tell you why it's not going to happen. They look down and go, oh my gosh, that's a really good idea. We know that MAS, the Monetary Authority of Singapore, they hate stablecoins. They love Abex's ideas. So I will tell you, all this is not through regulation yet, so that's a grain of thought. We're doing a pilot with 4 major institutions this fall. Pilots don't even take that long. It's basically a done deal. We're just doing it for PR basically at this point. Or they are. I keep saying we, but you know, when you're involved in the business so much, you know, you just say we. Where were we? Okay, so why is that important? Well, you're cutting out the Western Union of institutional market. You're cutting out the banks that took advantage of all the friction. You're cutting out all the middleman. You're able to move your collateral around really efficiently, really quickly. And the clearing houses will take that tokenized treasury, tokenized commodity, tokenized real world asset. Doesn't matter what it is. I could tokenize this chair back here. Okay? The banks will take it because there's title to those assets in real time. How the current stablecoins are made up, like there's a, should I pick on, I think it's JP Morgan. Let me pick on JP Morgan. And it's not their fault. Let's say JP Morgan, I'm not sure if they did or not. I don't remember the name. They issue a stablecoin over here, okay? At the same time, that stablecoin doesn't have digital title. It actually just convolutes and adds an extra step to everything. It's ridiculous, okay? There are a lot of benefits to blockchain, okay? And don't get me wrong, Bitcoin as a store of value, it's like a 500-year invention. It's incredible, okay? Blockchain in general, incredible. You know, I think there's a lot of cool projects out there. They're retail driven. Most of them are going to be a big fat zero. But when JP Morgan issues that stablecoin, they're actually keeping another internal ledger on their own servers with title, so they can match it. So you have a title problem. Another problem you have is how the current stablecoins are, how they're coded is it adds an extra step in the clearing process. I think it makes it 4 steps. I could be wrong on this because I'm not an expert on clearing, but basically I've been told that you can't clear the funds within 24 hours. It's a no-go. So if you can't clear the funds in 24 hours, you can't make a margin call. Institutions aren't going to touch it, okay? Even if a clearinghouse accepts these stablecoins like USDC or Tether, even if they do, which I think most of them are going to say no. I know Abaxx exchanges Abaxx Clearing would say no, or they're going to give such a large haircut where they're going to say, Joe, fine. You can use your tokenized LNG that Tether provided, but because you don't have title to it, we're going to lend you like 500 million off your billion. Heck no. I can go somewhere else and get 950 if I want, right? I'm going to do that. So you have this liquidity gap problem where you can't get the funds in time. So you got two issues going on. You got the title issue and the funds can't get there in time. How big of an opportunity is this? I thought originally this was just, hey, just within the exchange. I didn't know that it was a plug and play. Hey, we can go to a BlackRock and use their, I'm just picking on them. Let's use Charles Schwab. I can go to Charles Schwab and SNVXX, one of their money market funds, tokenize that. I suspect if you look under the hood of those money market funds, they're doing these repo transaction, repurchase agreements where, big banks are swapping funds overnight and borrowing and lending low rates, okay? If you tokenize that, super fast, right? Back and forth, super fast. Takes out middlemen, takes out friction. It's going to be really inexpensive. So what I think is going to happen is we're going to be getting a few basis points off these trades. And we're also going to be getting some basis points off of collateral setting in the clearhouse. Guys, if you haven't been looking at this for 5, 6, 7, 8 years in the crypto space, and this was the promise of crypto, and you know what? Bitcoin delivered, I guarantee on that. And we're all on the same team. They're just trying to do it from a different standpoint. And I was wrong all these years thinking that way. This is such a big opportunity. We think we're 2 years ahead. If we are actually 2 years ahead, this could be a $1 to $3 trillion business. And here's how I look at that. Moving money for institutions is the holy grail. We are the only one in the world that have a possibility of doing it. Okay? We know the tech works. We just need regulatory approval. The regulators want to see pilots to get comfortable with it. And then after that, it's not necessarily a done deal. Their risk teams and their attorneys have to look through, the contracts and how everything's put together. That is a humongo deal. So here's how our family looks at Abex as a whole, and then I'll talk about the final piece because we're about 52 minutes in. We see this. Rarely can you get an asymmetric investment where your downside is protected. So originally when we were buying this, the LNG, not the LNG, the commodity exchange and clearinghouse licenses were our downside protection. Now, because we have a couple contracts that have a lot of momentum, that adds additional protection. So here's how a bond trader would look at it. He goes, okay, if the company has $100 billion upside, just make the math easy, and I think they have a 5% probability of succeeding, you would this is how you do the Bitcoin markets too. You would price in a $5 billion valuation for Abex. Okay, it's trading at $704 million right now. Okay, so that's how you would price it in. Now, obviously, over what time period? No clue, right? It's got to be a reasonable time period. But let's say 5-year time period or 10-year time period. I mean, we're already like 8 years in on the core team and then 5 years being public, okay? If you look at the major exchanges, usually it's about 20 years before they get monster, okay? And they compound incredibly. Now, there's a little bit of survivorship bias there, but if you look at all the exchanges of the world, especially the futures commodity exchange, they're so profitable. I think they compound. A lot of them are compounding 16, 17, 18, 19, 20, 21, 22% a year. It's ridiculous for decades. How do we see this business? Well, we see the exchange as, we didn't know at the time. Now we're very certain it's a black hole. Everyone wants to trade on it. There was a conference few weeks ago between, I don't know how to describe it. It's like it's kind of like a your chamber of commerce for energy. and they met with, I think, the Singapore government, or I'm butchering this, and Abex was the intermediary. We are members of that Chinese group, and we're the only, I think, non-Chinese member and the only exchange outside of China. Um, I know that there's 600 members, and I also know that there is extremely high interest of all 600 members to do something with Abex. Right now, I think it's just a manpower onboarding problem. The tech company, last we checked, like 3 months ago, we were told there was 30 heads at the tech company, and then there's about 50 heads at 50 people at the exchange in Singapore. Um, you mean I can trade physically delivered products to hedge out my risk? The exchange isn't going to steal my information. I have my own login, everything's secure, and I can transfer collateral at T0. You better believe I'm going to trade there. Okay? And I think that's what the world's waking up to. And when you have a benchmark, basically liquidity begets liquidity. You hear that term. If everyone's taking reference price or trading somewhere, I have to trade there too. So I do know we will be, I think they're going to be launching thousands of paper contracts as well, a lot of lookalike contracts. The only reason we have to do that is, traders and they like the whole suite of products. So we've got to recreate a lot of those. But we did all the really, really difficult ones first. And yeah, so how we see this, as we thought years ago, hey, if this works really good, it's going to be a $5 to $10 billion business. We're going to make a bunch of money and walk away. It's going to be awesome. We're going to be, have a small piece of launching benchmarks. Now I'm thinking, oh my goodness, it's a black hole liquidity. As long as ICE and CME can't recreate everything really quickly, which I don't think they can. Even if they launch, it's probably a foregone conclusion. They'll probably launch a physically settled LNG contract, but we're going to have the liquidity before them. First mover almost always dominates. Barring something crazy, I think there's a strong potential this is a $100 billion exchange 20 years from now. I think there's a strong possibility it's a $20 billion exchange less than 10 years from now. Reason is, you're going to be 15 years in. And then you're going to ask, well, Joseph, why is the stock trading so low? Well, we trade on a dinky exchange comparatively in Canada. A lot of investors can't get access to it. You have to trade OTC, over the counter. We were thinking about, they were thinking about uplisting to a big board exchange. Those are really expensive to maintain. Didn't need the money at the time. And there's another rule, which I think is happening, is in Canada. It's a crazy rule because it's illegal virtually everywhere else in the world. You can naked short a stock, and I think algorithms do this as well. So basically, I don't know who does it, the issuer, market maker, whoever it is, issues the share. They issue fake Abaxx shares, allow me to dump it on the market, and I just keep dumping and dumping and dumping. Like last month, I think there was like 49,000 shares short sold in August. Now, the catch is those shares have to be repurchased eventually, so watch out. But I think if we were on a big board exchange or a private business, this business would be valued easily at $3 billion, probably $5 billion at this point. Okay. So that's your downside protection. And this is why I was willing to call some friends and family and say, hey, this is what we're doing in the fund. We did a major rotation. We bought a big chunk of this business because of the downside protection. Okay. How do I look at the collateral movement? You're going to think I'm crazy. If we have first mover advantage for 2 years, it's almost a foregone conclusion we're at a $50 to $100 billion market cap sometime in the future. If we get the liquidity and we're moving around capital for a big chunk of the institutions across the world, we're going to be in that range easily. There is a pretty darn good possibility, and I just can't put these numbers together. I know that I think it's way, way more valuable than that. I think we're north of $1 trillion market cap, and it's not hyperbole, it's just math. If you're the only game in town for 2 years, you're at a significant disadvantage if you're a money market fund or a commodity fund, and you have the ability to tokenize and use your collateral more efficiently. You're at a significant disadvantage if you don't do it. Okay, so the first movers to tokenize money market funds and gold and commodities on Abex have a humongo advantage. And when they do that, the participants can borrow more money and there can be more activity there. So I'm very excited to see this happen because I think it has a good probability of bringing some commodity prices lower because of this. Okay. So I know that was a lot. Probably missed a lot of what I wanted to cover. Here is the off in way left field or way right field is the third leg of the business. It's a much less, okay, we think that Abaxx is going to totally dominate the finance markets, okay? That's almost a foregone conclusion because where they're at with things in the tech they're using. It's just so much better because these major exchanges, ICE and CME, they are like, I think it was one of them. They're doing actually a fairly good job of updating some things, but come on, guys, $100 billion business, and you need to update the tech. Our tech is not updated. It's built differently. For instance, like the battery metal contracts, there's no warehouse that we're pulling the metal from. It just goes from producer to delivery. It's so much more efficient. Everything's much more efficient. And the reason why these exchanges and clearinghouses make so much money is all the money is up front. Like we spent like $50 million over 5 years trying to get the clearinghouse and exchange licenses. But once you're done with that, I mean, the margins are like in the high 60s or low 70%. It's incredible. So you've got, let's call it, our family's very sure this is going to be a $10 billion company, very certain. We think it can push into the 20, 30, 40, 50 with just the exchange, give enough time, okay? We're very certain that we're between 50 billion and 100 billion really easily on the tech. Big if it works, and if we can onboard people, and if we maintain a lead, okay? So works, onboard people, maintain a big lead. Those are big ifs. I get it. But when we're looking at risk adjusted, on a risk adjusted basis, you go, how can I maximize my downside and maximize my upside option? Okay. So if the whole thing were to fall apart and we just had a commodity exchange, we're going to build a great commodity exchange. 10, 15, $20 billion commodity exchange at a minimum, and we're going to have a great time. Okay. If the tokenization stuff works, I think $100 billion business, and I know this sounds crazy, way too low. I think we're going to be in the upper hundreds of billions of dollars. I really think, personal opinion, is going to be in the top 20 largest businesses on the planet. Okay? Those are the two businesses most people talk about right now. Okay, the humongo wild card, and I say wild card because this is a stretch whether it happens or not. Within central to the ID++ technology is decentralized identity. Okay, so originally when I was looking at this tech, I go, wow, they could license this out to a bunch of other exchanges. Decentralized identity. This is going to be really good. We're just going to license this everywhere. Okay. Well, here's where the real money's made. The real money's made is if we can use ID++ outside of the exchange. So what they did is, here's our advantage. ID++ with the vault, the sign, the messenger, and the ID login creds, those are built to a high standard. Basically, the most difficult client you could build for, which is a clearinghouse and exchange. Okay, futures commodity clearinghouse and exchange. That is really good because then all the other bars we got to hop over are much lower. So Here's what I think the team envisions. Now, they probably won't say much about this because there's a lot of large companies working on this right now, but they're walled gardens and they don't have an incentive to do this. In the age of AI, think about it. What is Abaxx Technology? It's a risk management company, okay? We're going to launch futures contracts so you can manage your risk in the commodities markets. We're going to move collateral around T0 so you can manage risk in the collateral markets. We're going to use ID++ so you can manage your identity and your information risk, okay? So in the world of AI, I'm like crazy concerned. Like I don't post photos of my daughter ever on social media or anything like that, if possible, because the tools out there aren't there to protect our identities right now. So here's what I think is a possibility. This is probably the max TAM on this, and the max usage. But if we can get to a position where ID++ can have a large partner, whether it's probably a Microsoft or an Apple or an Amazon, it has to be a global tech partner, where we can implement this. Basically, you'd be able to log into your computer and you'd be able to go from walled garden to walled garden to walled garden. All these different suites, like from Gmail to Yahoo to you name it. QuickBooks Online, Monday.com, Shopify, whatever. And you'd be able to jump from one to another without having to re-log in. None of those businesses would have your credentials. The computer would know it was you. Now, there's people saying, well, why don't we just use iris scans? Well, okay. The problem with that is it's just like a password. They have your iris scan in a bank where hackers can hack it. So you didn't really get anywhere. So if you use zero-knowledge proof decentralized identity, where the real money, like the big, ridiculous money is made, is I picture it as a layer over the internet. It's a protocol layer and the apps are built on top. So what that would do is we would basically have an ID layer globally over the internet that would protect us from AI, from bad actors, all that stuff. That business is a $10+ trillion business. Sounds crazy saying it. So you can see that the problems that Abex is tackling, like Josh joked one time, they were like working on like 10 really difficult problems all at once, and each one of those problems is multiple $100 million to billion-dollar problems, billions of dollars problems. So I don't know exactly how it works. I'm going to give you my framework for how it works, but I know this is not how, and that's why I'm kind of willing to say a little bit about it, because I don't want to tip off whoever's working on this. But basically, how does the computer know it's you? Well, if you know anything about cryptography, like how Bitcoin works, there's a public key and a private key. So the world, like if I make a Bitcoin vault or I try to log in doing something using cryptography, the world has a public key. Everyone can see that, okay? But my private key, I have a copy of it, and it fits with the public key and allows me to unlock things or send value or do certain things, okay? What I think is, and I don't know the mechanism for this because I know they had to, like on the title piece, I thought they had to use like 5 cryptographic systems, and I guess Bitcoin would be considered one cryptographic system. Someone correct me, some cryptographer, please correct me if I'm butchering this. Basically, the longest chain wins. And if you know Bitcoin, when you're transferring value, how do you know someone's not cheated? Well, basically, your Bitcoin transactions get added to a ledger, and there's all these computers all over the world called nodes, and they look at the ledger and verify that that's the correct one. How do they do that? They look at the longest chain of Bitcoin transactions and compare it to all the other ones. And if there's a shorter one, the computer automatically knows, hey, someone made that one up. It's a false one. Let's throw it out. In the same way, you can do the same thing with identity. And I've not heard anybody besides Josh talk about this, so hopefully I'm not sharing too much. Let's say I have a driver's license. When you sign up for a job, it's you fill out W-2 and then you do an I-9. Well, on the I-9, it gives you a list of credentials. Hey, you can have, and certain credentials trump other credentials. I can have, you know, a driver's license, my birth certificate, plus something else gets me in. Or I can have the birth certificate plus my passport gets me in. So I think how I envision this is each one of my IDs, that could be an attestation from my banker, would be one ID. My driver's license would be another one. My YMCA card would be another one. My passport would be another one. My login credentials over here would be another one. Each one of those things that identify me would have a private key and a public key. Okay? So basically, when I'm logging in, and I'm not sure the mechanism for this because I just can't figure it out, but basically, when I'm logging in, the computer would have the public keys. Okay? Hackers can't do anything with the public keys. I have the private keys. If I take my private keys of like 10 different IDs, okay, and I plug them in, or maybe 3 different IDs, the computer will already have my public keys. They know it's me immediately because they know that the holder of that private key for my driver's license, which is me, private key, can only be Joseph. Same thing as my passport, can only be Joseph. Same thing as my YMCA card, can only be Joseph, okay? And when that's activated, I can do whatever I want that's attached to Joseph on the internet. Now, obviously, a lot of this stuff has to be rebuilt because obviously, like, your Gmail login would need a public key. You know, your Yahoo would need a public key. Your Money.com would need a public key. And you have the private keys. And the private keys, instead of specific to that login, it would be specific to an identification. So this is a theory in progress, and obviously they can't share this because, it's very, very sensitive, and obviously we're never going to see the code, but that's kind of, the comment was made one time, the longest chain wins. So if there's someone else out there claiming to be Joseph Metcalf and they're trying to log in, and they have 3 IDs, but I have 10, the computer's going to say, I'm Joseph because I have 10 cryptographically verifiable identification. They're basically data points on your life. You can get a data point on your life without sharing data. So I think this is going to sound crazy. Actually, I don't think. I got this from someone. I just can't say who it is. They think that this breakthrough is bigger than blockchain, is more valuable than blockchain, and it's patented already, okay? So take that with a grain of salt. So I see this as three business lines. You've got your futures commodity exchange, your benchmark contracts. You've got the move your collateral, okay? And then you've got your ID piece. And call me crazy. We've been following this. I am a very young fund manager, in all honesty. I've only been doing this really, really seriously for 5 years. Really studying markets seriously for 8 years, and then building companies for 17 years. So I could totally be wrong on this stuff. I don't think I am. As far as the ID stuff goes, I think we're going to dominate the ID industry within finance, within exchanges and clearinghouses. And I think people will, they're going to license it from us. But what I would like to see, because I'm tired of people stealing my data, I'm tired of these walled gardens just raping me, or like I turn off my Google location. I know they're tracking me anyways, and it just makes the experience so much worse. I got to tell them where I'm at, and I'm just tired of all this stuff. I'm tired of Alexa listening to me. I'm tired of, just in the house, your conversation. If you want to have a private conversation, phones go in the microwave, or you go outside or something. It's just ridiculous. I don't want that data harvested. If we have an ID identification layer, okay, this is where it gets really cool. If I have an Optimus robot in my house, I'd love to train that Optimus to do different things, to tell them things, to ask them about certain things, but I don't want my data going out, through the large language model. So if I love grokking, and I trust Elon, but if I posted all the LNG contracts, well, it's got that, and already in a court of law, I think whatever you type in to these AI search engines, it holds up in court. So it's really about managing risk around our lives, and this is very cool. So, managing risk for institutions, managing risk for us, and then managing risk for our identification and digital. So the big businesses of the 21st century are built using digital information. Okay, the businesses of the last century were part a representation of digital. In the century before that, coal, steel, steam engine, airplane, all of that. So we are at the very frontier of what is possible. Normally, this would not be in a public company. I am so grateful to whoever it was, if it was the Lundin family or Robert Friedland or whoever forced said, hey, Abex, make sure you're public day one. It's just been a tremendous ride. So anyways, I know that's a lot. I know I probably missed a ton. People are going to be screaming like there was a Mind Hub Abex call today. And there's some really good base stuff too, where like they're going to try to they're doing a pilot where they're going to try to tokenize these minerals right at when they come in the ground as they're being transported. Why is that really important? Because then you can use it as collateral right away. So the faster you can use these commodities as collateral, and the faster you can hedge them, the more profitable businesses, the risk comes down. When the risk comes down, prices hopefully theoretically come down. So we're very excited. There's a lot happening. The next, I think this fall, the big thing would be the pilots coming out. I'm sure there's going to be tons of announcements with people wanting to trade on the exchange from China. There was a major hire that was just done. I don't remember. Let's see. Was it Robert? Major hire that came from a major exchange. I think he's head of product, and now he's head of our product. Let's see. Russ. He's part of the team now, so it's getting de-risked. So your main players are Nancy's the CEO of Abaxx Exchange, Josh is CEO of Abaxx Tech, Joe Rea is a big player in the exchange. I'm going to get all the titles wrong, so I'm not going to mention them. Then you got Tom McMahon, that's one of the founders. Dave Greasley, he does the Smarter Markets podcast, which is great. And he's also, I believe, The Economist. I'm butchering all this stuff. I know I'm missing. This is why I can't do this on the fly. Let's see here. Who else do we have? Dan McElduff, I missed you, Chief Risk Officer, and then there's just a plethora of people under that, just too many to mention. So hopefully that gave you guys just kind of an idea, how are we thinking about this business? And I will tell you this, here's what we did. I had a personal position when they had the licensing, we brought family money on. When we found out that, oh my gosh, the tokenization tech does work and we can do it outside of a walled garden, we 4x'd our position within 7 days. It had to be the fastest rotation of capital record history. I was on my computer because I was worried someone was going to figure this out before me and buy it. And so I would tell you at $700 million, it's a no-brainer. We're telling people that, it's, a fair, price with downside protection is probably up to a couple $2 billion at this point. We don't want people to get hurt, and, we don't want to advise people on their individual positions, but that's a little bit kind of how we're thinking about it. And, a lot of this information has come from years of learning from a retail community called the 29ers, who are just super sleuths. They have their tentacles in everything, and got a lot of the information there, and just people sharing information back and forth. So I didn't come up with all of this on my own. So hats off to a lot of those guys and gals. And Neil with Investor Cubed have done a phenomenal job just keeping in touch with investors and all them. So yeah, and what's really helpful is Josh likes to post on Twitter. It is not normal for some people to have access to the CEO, especially on Twitter, and for him to spend that much time on Twitter. But X. I think he uses X so he can kind of post his ideas. And like get there out there. And there's been a few times he's posted too much and had to take the X posting down. So it's been a phenomenal 5-year journey. We're extremely excited. We're basically sleeping this stuff right now because it's so exciting. And I think the next 5 years are just going to be a barn burner that are going to be so unbelievable on the products coming. I know there's some very complex, very innovative weather derivatives products coming, and weather derivatives do exist, but probably not in the way that they're thinking about it, and I don't have any inside scoop on that. And then be ready, they're going to be launching probably several thousand paper contracts. That's not a dish towards, oh, why are you launching paper contracts? We have to. They have to because, if you're going to trade on Abex exchange, you need all the other products that are available on ICE or CME. So I'm not going to give ICE and CME advice on what I would do with this business right now. I don't want to put that information out there, but we're coming, and it's going to be a good ride. So hopefully this helped, and have a great day. Thank you. Hopefully the audio's good and the lighting was okay. But from my lips to your ears, hopefully this is helpful. Take care.